Good afternoon and welcome to the Blue Line Metals Edge here for Wednesday, August 31st. I'm Phillip Streible, Chief Market Strategist at Blue Line Futures. If you're watching this on YouTube, be sure to like and subscribe to our videos. If you need additional information, go to bluelinefutures.com or send an email to info@bluelinefutures.com if you'd like to receive one of the tactical insights reports here that we've been putting out. We've been building out on it, and I think it's a really good piece. I think it's something that could really help you in your trading, and we're going to continue to put different trading ideas on there and things like that to try and exploit our thesis in the market. So looking at the markets here today, they started off much firmer, and then as the day's progressing, we're seeing U.S. equities backing off. We're seeing oil that went through a complete liquidation, came down to about $88. Now we're bouncing back. We think that oil to the upside, we think that it's going to stay within this probable range. Then also you do have gold and silver. After that rollout, I think a lot of people had just liquidated the positions. They didn't roll them forward to December because if you look at silver, it came back down and it actually breached the contract low. So although this is oversold territory and it comes down to those previous lows, remember the markets crash from oversold territory. That's kind of the 1-2 punch that usually comes down. So we've got some ideas working on silver to play it back to the upside, and I'll outline those here shortly. Looking at this week's focus here, we do have CPI data. We had ADP, and we also had Chicago PMI. The ADP data came out 132,000, but one of the big headlines that I think people are missing and a lot of people really need to understand is the Fed's quantitative tightening, because I did read a report today. And if you Google Fed QT, you could read some of these Bloomberg reports that they are, ramping this up. They're going to take liquidity out of the market, and that's why markets are going to sell off. So back in November, when U.S. equities were at their all-time high, so like the NASDAQ, for instance, that's when the Fed was purchasing, it was $120 billion a month in bonds, and that was when you had that all-time high in the NASDAQ. It would come in right around here, and that 16.5, and then since then you could see that we had one more threat to the upside, but we've melted off over 4,000 points. The S&P 500 dropped 4.1%. The reason why I'm bringing this up is that they were only starting to do the quantitative tightening. They are going to accelerate quantitative tightening into the end of the year. If they do that, that's going to really remove a lot of liquidity, and U.S. equities could really be under the gun. Same thing with like gold and silver and things like that. Once they stop the quantitative tightening, usually the market bottoms within a few weeks after that. We'll run some back tests on that for you guys. So that's something that I'm going to put more information on. As far as on the ranges, the probable ranges, if there are volatility events in the overnight, we're going to highlight which ones we're dropping down, and we are going to refresh those ranges throughout the day. So you guys will get a nice update on those. I think that these are something that you could really use to risk manage your position. Say if the market is bearish, you could use those rallies to sell against the upside of the probable range, and on the downside, you could look at places to cover. Looking at trend reversal points, if you were going to try and play the other end, you were going to buy the dip, like something like on the metals, which have turned bearish trend, you could use some of these probable points here as your bottoms and then try and sell those rallies outward. So these won't be updated, the trend reversal points, because they are static when they are calculated. Now looking at gold, you can see that the support was broken. This is probably your next probable support, and your key overhead resistance still remains right at 1800. If we could close over 1800, it'll most likely flip to neutral, and then a close over like 1805, 1810, we go back to bullish trend. If you're trying to pick the bottoms on these markets, we were looking at on silver, there is a seasonal coming up at the end of the month. It's buying on September 30th, selling on October 25th. It's gone up 12 out of the last 15 years. With silver so low, the way we're going to play this rather than trying to add futures is we were looking at the December silver, the $18.50, $19 call spread. They're costing 17 cents. I think you could get from 16 to 14 pretty easily, somewhere in there. That's where we would kind of put that recommendation out. And then I think you can hold that one for at least a double or into expiration here to try and capture the full amount. We do believe that the seasonal tendency of silver rallying into the end of the year is probably high and probable this year as well, depending on how bad the sell-off is and where our downside point is. But I think that's a good starting point on that one. Now you can see that the trend system is short on gold. The buy stop's at 1,800. The sell trigger was 1748. It's up $1,210 on that market. You'll probably see continued liquidation in the crowding analysis at the end of the week. Looking at silver, it made a new contract low. It crashed from the oversold territory, which I had outlined. So going down, the system is short on silver. It's got a $700 open trade equity, shorted at 1898. Settlement is 1828 right now. So what you would do is you basically move your stop to a break even if you're following this particular trade. The gold silver ratio breaking back out to the upside. We don't want to see this thing over 100, 120, which it could be if those metals keep getting the pressure on them, and then gold does not sell off as fast as the silver market. Looking at copper, we're tracking a 25,000 pound contract on December copper. That's rolling over as well. There are people going to look to cover the shorts right at this level and then maybe take a small buy and a long position on there. There's micro contracts if you're going to trend trade. You can see that the market is flat right now. The crowding analysis was they actually ramped up buys, so expect this to see a big pullback here this week. On the platinum market, again, retesting these lows. Platinum's really been kind of a dog. It should have been a nice buy right at this level. It should have held the 50-day, but it just seems that, the U.S. equity sell-off really is what weighed into it. Now, the system is short on platinum right now. The settlement was $854. It's up $1,160 on platinum on a one lot. We did outline the crowding analysis on where things are going. Now we're pushing into the fourth quarter. You're going to see we're going to go into this deflationary event, and that's where most risk assets are going to go lower. And I think that's what crude oil was also anticipating. Now looking at the CME Fed Watch tool, 66% versus 33 on a 75 basis point rate hike to 50. That was yesterday. Let's see where we're at today. That 75 basis point looks like it's being cemented right in the cards there. The ECB also said they were going to do 75 points as well. So that's the reason why. I put up the 2-year, 10-year spread, and I wrote a brief explanation on, because you keep hearing about it, but people don't understand it. The 10-year often associates with mortgage rates, consumer confidence, while the 2-year rate is a barometer of the economy. As those go up, you have risk involved, and an inverted yield curve traditionally predicts a recession or that we're in a recession. And you could see that the yield curve, it has gone inverted. It went briefly inverted, and then it snapped back. And I think that was when, Biden was like, we're not in a recession. And then he reiterated it again. And, according to this, it's predicted like 6 out of the last 8 recessions. And I'm very confident we're going into one right now. So it's going to be 7 for 9. So in the data too, those were like so long ago when it didn't predict it accurately. It was, like 50 years ago or something like that. You can see the dollar index threatening this again, those 20-year highs busted back out to the upside. We're getting some volatility and some consolidation here in the dollar because the dollar did pull back just shortly here. The system's long on the dollar. It's up $651 for risk management. 107.84 is where its stop would be. That's probably a good point. It's probably associating with this low for a stop, and that would be on a closing basis. Now, oil got hammered again. Excuse me. It pulled back into this range, this 90 to 87 range, and I really think that that's a good buying opportunity for the upside. I'm using the December contract because I want more time on it. The 50-day moving average, 86.54. Here's that 200-day moving average where it came right up to. But I think that crude oil prices, if you get disruption in Iraq, which Google Iraq, it's gone a little bit haywire in Baghdad. Google Libya, they're another major producer. They've gone like almost into like a civil war. And I think that OPEC, now I added this on the report, the OPEC watch tool. So this was yesterday. And you can see that was, they had significant output increase, no small change, output decrease. So now that number, it actually backed off, and it says that they're going to do an increase, but I can't really see that. I mean, unless there were those disruptions and they tried to increase, but other than that, I think that it got factored in already on this pullback. So we got to keep an eye on that. Keep an eye on these changes. We'll get comfortable with this data as we monitor it throughout the month, and then looking at the rest of this, the future performance, the returns heat map. You can see that gold been a dog this year. Silver's been much worse, down 26%. A lot of people asking, if you bought silver around that February, March, April, those highs when it was the Russia-Ukraine business, you could see since then silver's had a massive decline, and it reflects in those long-only accounts. So those people will need to continue to average down or look to roll it out forward into next year and look at it as a long-term investment. Now, getting into correlation matrix, it is very, very correlated. The gold and silver, 93%. The inverse correlation is like 89%. So the dollar goes up, gold goes down, silver goes down. The volume, it slacked off. I think that most of the beating kind of really occurred already in many of these markets. And then our key dates here, we want to look at expirations for options for October. It's going to be November 27th. That December play that I'm mapping out, that's option expiration is going to be November 22nd. And you can see where the futures, if you're going to do futures, you want them going all the way to the end of the year. For silver, you're going to need to do the March futures so you can go all the way out past that. If you have any questions, futures options trading, you'd like to get this report, just send an email back to info@bluelinefutures.com or give us a call, and we'll be sure to get you up on a trial on it. You can check it out. I think that the reports come along great. We're adding a lot of good stuff on there. So if you have any questions, futures options trading, give me a call, 312-858-7303. And remember, futures and options trading involves risk of loss. May not be suitable to all investors. Good luck, good trading.